Have you ever wondered how to start investing in the stock market? If so, you're not alone. The world of stocks and shares might seem daunting at first, but it's actually a lot simpler than you might think. And the benefits? They can be truly life-changing. Investing in the stock market is more than just buying low and selling high. It's about fostering financial security, growing wealth over time, and even achieving financial freedom. But how do you get started? How do you navigate this seemingly complex landscape? Well, that's where we come in. This video is designed to break down the process of investing into simple, easy-to-understand steps. From understanding the stock market, setting financial goals, choosing the right broker, creating and funding your account, to buying your first stock, we've got you covered. So, ready to demystify the world of stock investing? Stay tuned. First and foremost, one must grasp what the stock market is. Let's think of it as a colossal global marketplace, a bustling bazaar, if you will, where individuals and businesses come together to trade. But what's on offer here isn't fruits, vegetables, or artisan crafts. Instead, it's pieces of publicly traded companies, known as shares or stocks. When you buy a share, you're essentially buying a small piece of ownership in a company. As the company performs well and grows, so does the value of your share. Conversely, if the company struggles, the value of your share may decrease. It's a game of highs and lows, risks and rewards. Now, how does the trading of shares work? It's all about supply and demand. If a company is doing well or expected to perform well, more people want to buy its shares. This increased demand pushes the share price up. On the flip side, if a company is expected to do poorly, the demand for its shares decreases. Sellers outnumber buyers, and the share price goes down. The stock market allows this buying and selling to happen seamlessly. It facilitates the transfer of shares from sellers to buyers, ensuring that transactions are conducted fairly and efficiently. It's important to note that the stock market isn't just about making quick profits. It's a tool for wealth creation over the long term. As businesses grow and prosper over time, so does the wealth of their shareholders. In essence, the stock market is a platform that allows you to participate in the economic growth of companies, sectors, and even countries. It's like having a front row seat to the world's economic performance. But remember, like any marketplace, the stock market has its own language and rules. It's essential to understand these before diving in. Learn about different types of stocks, how to read a stock chart, what affects stock prices, and so on. Remember, knowledge is power in the world of investing. So, equip yourself with the right information and understanding before you start your journey in the stock market. You're not just buying pieces of paper, you're buying a piece of a company's future. Before you dive into investing, you need to define your financial goals. It's like setting a destination before you start a journey. You wouldn't embark on a road trip without knowing where you're going, would you? The same applies to investing. Your financial goals are your investment roadmap. They give you a sense of direction and help you determine the best investment strategy for your needs. Whether you're saving for a down payment on a house, planning for retirement, or setting aside money for your child's college education, each goal requires a different approach. Your goals also determine how much risk you're willing to take. If you're saving for a short-term goal, you might want to stick to safer investments. But if you're investing for a long-term goal like retirement, you might be willing to take on more risk for a higher return. So ask yourself, what are my financial goals? What am I investing for? How much risk am I willing to take? Answering these questions will help you determine the best investment strategy for you. So think, what are your financial goals? Now you're ready to choose a broker. But who or what is a broker? Well, in the simplest terms, a broker is a professional or a firm that you hire to buy and sell stocks on your behalf. You give them the orders, and they execute them for you. Choosing the right broker can feel like finding a needle in a haystack. There's a vast sea of brokers out there, each with its own set of features, advantages, and disadvantages. But don't fret. Here are a few key factors to consider that can help simplify your choice. First, consider the fees. Brokers need to make a living too, and they do so by charging you fees. These could be in the form of trading fees, account maintenance fees, or others. It's important to understand the fee structure of each broker you're considering. A broker with low fees might seem attractive, but remember, you often get what you pay for. Next, think about customer service. The investment world can be a complex maze, and it's crucial to have a knowledgeable and responsive team to turn to when you have questions or face issues. Look for a broker that is known for its excellent customer service. Lastly, consider the broker's platform usability. In today's digital age, most brokers offer online platforms or apps for trading. You'll want a platform that's easy to use, reliable, and offers the features you need. Read reviews, try demos, and choose a platform that feels right for you. Now, these are just a few of the factors to consider when choosing a broker. You might also want to think about things like the broker's reputation, the range of investments they offer, and whether they provide educational resources. Remember, there's no one-size-fits-all when it comes to choosing a broker. What works for someone else might not work for you, so take your time, do your research, and choose a broker that aligns with your needs and financial goals. Choosing the right broker is a crucial step in your investment journey. It's your gateway to the stock market, a partner in your pursuit of financial growth. So choose wisely and happy investing. With a broker chosen, it's time to create and fund your account. Here's how you can get started. First, you'll need to provide some basic information. This includes your full name, address, and social security number. You may also be asked about your employment status and income. This is standard procedure for all brokerage accounts. Once your account is set up, it's time to fund it. You can do this by linking your bank account or by transferring funds from another brokerage account. Some brokers also accept checks or wire transfers. But here's something important to remember. When it comes to investing, it's crucial to only put in what you can afford to lose. Investing is not about making quick money. It's about growing your wealth over time. And that requires a level of risk. So, don't put yourself in a financial bind. Invest wisely and within your means. Remember, only risk what you can afford to lose. You're all set up. Now, the moment you've been waiting for, buying your first stock. Let's get right into it. The first step is choosing a stock. You might be tempted to go for the big names you hear about in the news, but don't let hype be your guide. Instead, you need to consider a company's financial health, its competitive position, and its potential for future growth. This will involve some research, but don't worry, it's not as daunting as it sounds. Start by reading the company's latest earnings report. This will give you a snapshot of how the business is doing. You'll want to see increasing revenues, strong profitability, and a manageable level of debt. Next, look at the industry in which the company operates. Is it growing? Is the company a leader or a laggard? These factors will help you assess the firm's prospects. Once you've done your homework and chosen a stock, it's time to place your order. You'll do this through your broker's platform. You'll need to decide how many shares you want to buy. If you're just starting out, you might want to start small. Remember, it's not about how many shares you have, but the value of those shares. Then you'll have to choose the type of order you want to place. A market order will buy the stock at the current market price. A limit order, on the other hand, allows you to set a specific price at which you want to buy the stock. If the stock doesn't reach that price, your order won't be executed. Finally, review your order carefully before you submit it. Make sure all the details are correct. Once you confirm the order, it will be sent to the market for execution. And voila, you're now officially an investor. You've taken your first step into the fascinating world of stock investing. Remember, investing is a long-term game. Be patient, stay informed, and don't let short-term market fluctuations shake your confidence. Happy investing. You've come a long way in just a few minutes. We've taken a whirlwind tour of the investment world, starting with the basics of understanding the stock market. We've looked at the importance of setting financial goals and how these can guide your investing journey. We've also talked about the significance of choosing the right broker, the one who can best cater to your needs and help you navigate the investment landscape. We've walked you through creating and funding your account and laid out the steps to buying your first stock. It's a lot to take in, but remember, every expert was once a beginner. You've taken the first step, and that's the most important part. As you continue on this path, always keep in mind that investing is a long-term endeavor. Now you are equipped with the basics to start your journey in the stock market. Remember, the road to investment success is a marathon, not a sprint.